On behalf of Internet Society, India Mumbai chapter, and BTMA, and Nandita Koshal would like to extend a warm welcome to all to the webinar on governance of financial technologies, global perspectives. We have with us three very distinguished guests who discuss more on this topic. Our first guest is Sohrab Kalra. Sohrab is a senior manager, innovation and emerging solutions at Interac, Canada. A lot of us who stay in Canada and use Interac on a daily basis know how useful it is for us. He has over 12 years of experience spread across strategy, consulting, entrepreneurship, and product management. He plays a key role in progressing Interac's innovation agenda, focused on developing foresight and enterprise strategy, and helping drive key insights such as open banking. Before Interac, he was a senior strategy consultant focusing on commercialization and growth of emerging technology and trends. He also co-founded a SaaS venture that was acquired and had previously held product strategy roles with Microsoft and Amdocs. Sohrab holds an MBA from Batter School from Darden School of Business and a bachelor's in computer engineering. Welcome to the event, Sohrab.
I'm glad to be here.
Thank you. Our second guest is Sofia de Silva. Sofia is a senior consultant at Canadian Imperial Bank of Commerce, that's CIBC, Toronto, Canada. She started her career as a government regulator for Mexican pension funds, where she led the modernization of the industry with digitization. She pursued her MBA at Broadman School of Management, University of Toronto, where she won a scholarship from CIBC. Wanting to experience working in a startup, she became the CFO of a quantum computing fintech before returning to CIBC for their technology rotational program. She currently works in internal audit as senior consultant in data analytics, strategy, and governance at CIBC. Happy to have you with us, Sofia.
Thank you, Nandita.
Thank you. Karan, our third guest is Karan M. Gupta. Karan is a manager of pricing and consumer profitability at Capital One USA. With over 7+ years of professional experience, Karan has previously worked in the product management space with organizations such as Veritas and Cisco. At Capital One, he currently works on setting interest rates on backbook bank products, growth deposits, and driving profitability of existing customers. Karan completed her school MBA from Tepper School of Business, Carnegie Mellon University, USA, and bachelor's in engineering from West Mumbai. Interestingly, Karan has been traveling for the past 1.5 years, and each month he lives in a different state in the US. Pleasure to have you with us, Karan.
I am so jealous, Karan. I am so jealous right now.
Well, it has been a journey.
Yeah.
Thank you. So we will now begin with our discussion. So as we know, emerging technologies are changing the way we interacted with our financial systems. And when technology is integrated with finance, many governance challenges are bound to arise. These challenges are faced in equal parts by traditional, new, and upcoming institutions of finance. With this context, let's begin our discussion. But before we delve deep into it, I just wanted to ask a question with, to all our speakers. Why did you choose to work in the financial technology space in the first place? So maybe I'll start with Sohrab, Sofia, and then Karan.
Sure. So I think for me, it was a bit of serendipity and a lot of like thinking through what I wanted to do. So my roots are in innovation, right? I come from a computer science background, did a startup, then did consulting for a few years with on emerging trends and commercialization. So I was at a point where I was trying to figure out where do I want to be in the long run. And I started looking back at what I liked and what I have always, what kind of activities, environments, problems I've liked working on. And that's when I realized, like, for me, it was always about working on a complex fundamental
recording in
problem
progress
and, coming up with some creation of something new. And from that perspective, there were two options I was debating. I was working with a friend back in India from business school who was on the verge of starting a new venture, and that was in agriculture. So, which is again has the same attributes of complexity and the opportunity of change. But for family reasons, I ended up staying back in Canada. And then when I was looking at what could I do here? I ended up meeting my team, and it was a confluence of like both the sector and the team. So fintech as a sector has both the complexity and the opportunity for innovation, in the sense that the problems that we face with fintech um, are basically looking at reinventing the whole system, because the system that exists today has been there for like 50-60 years, and there's been incremental changes. Yeah, you tap your card now rather than inserting it, you have a chip now rather than anything else, but the basic problems in fintech remain the same, which is the speed and processing of the payments, and how do we think of money itself, right? All those kind of things. So those basic problems are still there, and that opportunity to fundamentally redefine how things work, and the kind of depth that was there, that was interesting for me. And it's an area that touches every aspect of our lives, right? So the breadth of impact is also there. So I ended up meeting my team, and there was that combination of intellect and drive that I found here, and so here I am 2 years later.
That's an amazing journey, Sohrab. Let's hear it from Sofia.
In my case, it happened also kind of by chance. My first job was as a government auditor for the pension funds, and I just landed that because my professor at university worked there. But for my first assignment, I received this data set with millions of records just to take a look and see if I found anything weird. Basically, think of know your client compliance in a regulatory space in Mexico where we didn't have KYC compliance guidelines. So I just play around with data, and I found a lot of inconsistencies, pointed to a lot of lack of controls, resulted in a fine of millions, the biggest in the industry, and now everyone was excited about it. So of course, for my next audit, they said, okay, can you do this again and again and again? And I just thought, wouldn't it be great if we had like direct access to the transactional data from the entities we supervise, and on real time, we could have these bots doing the data validations instead of me. And if they find inconsistencies, we could have like automatically request an extraordinary audit or submit the evidence for legal or whatever the process is. So 2 years later, we built that. We built a system that provided us with real-time transactional information from that entities that we supervise. We had geolocation from the transaction. We have biometric fingerprints, like so many other cool data points. And I was able to design the whole system. So after that, I just thought like, well, this is just in the pensions industry in Mexico. So what if we had this in banking? Later, I realized we hadn't built the wheel. This already exists. It's called regulatory technology, or RegTech, which is huge in financial services all across the world. And it just keeps on growing and growing. So that's why I decided to move to Canada to work in this space. The Canadian environment is the perfect balance between controlled innovation, but also a strong regulatory safe space. So that's my passion for now in fintech, in direct space. And that's what I'm focusing my career on.
That's amazing. From Mexico to Canada. That's a great journey, Sofia. Really interesting. Karan, you're next.
Sure. The reason for me were twofold. One, it was personal experience, and second, it was a little bit of trial and error. So in my family, my dad faced the repercussion of not managing finance correctly. So 20 years ago, he defaulted on some credit cards. And when I was pursuing my MBA, what I found out was it was really difficult to get a loan. Now, what I realized at that point in time, I had a rich uncle. So I still managed to come through to the United States, do my MBA. But what I realized is there's lack of opportunity where banking, if not or economics or access to resources, if it's not democratized, creates an inequality. So that's something talks to me. And something on the similar lines, microfinance is an area that I'm really passionate about. And this is something I explored by reading and talking to people. But on the other side, when I came to the United States, so my background is in engineering. So it was a very straightforward journey for me in my childhood. I was good at education. So my parents said, why don't you do engineering? I got into engineering, and then I was enjoying my job. But at some point in time, I was like, is this what I wanted to do? So I chose my MBA as a stepping stone to explore different industries. So I spent 6 months in Silicon Valley talking to different startups, different companies. I spoke to every founder. And then what I realized, the companies that actually spoke to me were fintech, or everything that was related to finances, access to finances. So that's when I made the decision that banking is where I want to build my career. That's what my passion is, and that's what my journey has been. So yeah, so while engineering gave me the edge, but it's my personal experience and just the general curiosity or my affinity to banking or fintech is what drove me in this space.
Really interesting. 3 people and 3 different journeys, and three different reasons to enter fintech. That's really nice. Now, delving into the topic for today. So, sorry, just basically technical glitch. So, what are some of the technologies, maybe existing or emerging, that you see shaping the face of fintech or bantech in coming times? So, probably, Sohrab, you can start.
Sure. So if I look at it like in terms of the next 5 to 7 to 10 years horizon, there are 3 or 4 things. Some of them are themes, some of them are technologies in themselves, which I feel would redefine how we look at finance today. And to me, those are decentralization, open data, and the new internet. And when you think of new internet, you think of the 3 layers of like the computing, the information sharing, and the technologies of the services built on top of it. So quantum, blockchain, and what do you do with AI, right? So when you start putting all of this together, you look at it from the fintech perspective. Finance is everything about creation, storage, and movement of money, right? And you look at the last 20, 30 years, that money is being physical, but now with digital banking and with all the things happening around crypto and digital currencies, that money is becoming more and more digital. So when it starts becoming digital, it's really just a unit of information, right? And we start looking at it in that perspective of unit of information. Any company through which that information flows can build services on top of that, right? So basically, every company could be a fintech company, right? And you look at the storage and the movement of that now. So movements like open data, that's picking up steam globally. You see open banking being rolled out in like different jurisdictions, including India. I don't know if you guys have seen, but there's been like account aggregators and the whole open banking framework being rolled out in India. So that basically changes the way who owns the attributes of this information and how it's shared, right? And then on top of it, lastly, you layer in the new internet, which is like new capabilities in computing and information structures through blockchain, AI. That basically allows you to create just fundamentally new services. Like Sofia, I'm sure you have an opinion on quantum, given your background with that company. As much as it seems like a theory right now, but it can provide for contextual AI through the newer simulations that it allows, or the training for AI algorithms that it allows. So that would allow for a whole new host of services and models to be built on top of the already changing creation, storage, and movement of money. So and then you throw in CBDCs and all that stuff that's happening around it. So what you see is basically a whole new way of the whole life cycle of money and how it moves, and all these technologies. Right now they seem isolated, but if you look at like 7 to 10 years down the line, there is a convergence path that they're on, and that's how I feel they'll all come together.
Some really interesting perspectives there, Sohrab. Karan, you're next.
Sure. I think Sohrab gave a pretty good perspective of what the high level landscape looks like in terms of emerging technologies. But let me give you a perspective from what I see in the pricing department and inside Capital One. Now, banking essentially, as I see it, has become commodity, right? So when we talk about pricing, each bank is essentially just following your competitors. We're talking about technology and tools. Essentially, that's essentially baseline for everyone. If you don't have a good app, you don't have technologies, that's something it's not going to help. So one of the things that we think a lot about at Capital One, and we actively focus on is three things actually. One is automation. When something is a commodity, you need to keep your cost down, right? So we'll talk about robotic process automation. Second, forecasting. How well is your forecasting? How well can you predict what's going to happen? Now, there are multiple benefits to it, but I'll come to that later on. And then the third one is how well can you predict consumer behavior, or how can you micro target them? And I'll again touch base a little bit on these as well. So let's talk about the automation. So at a very basic fundamental level, and again, whatever Sohrab mentioned is 100% true, and that is something that's going to change banking for good in really long term. But in the short term, when we talk about automation on a day-to-day basis, we run analysis on hundreds and millions of customers, right? Now, you can have 10 resources which are cost intensive, or you can have automation in place that reduces the cost. And it also provides you much more richer insights. So having those things in place actually helps us price our products more competitively. It helps us being more nimble. And that gives an edge in this fintech, in highly competitive environment where fintechs come in, which are not governed by the existing law, the federal laws. But big banks and the national banks are much more, have to spend a lot of money on regulations and compliance. The second one I talked about forecasting essentially. Now, there are multiple benefits to having accurate forecasting. One, your cost of funding can go down. The more accurate you are, you can reduce your cost of funding from multiple perspectives. It can come from treasury, it can come from product, it can come from cost of acquisition or marketing. Now, the more accurate you are, you can better utilize your resources, and that provides you another edge in terms of how well can you utilize your resources. So one of the things that I noticed at Capital One when I had joined a couple of years ago is that in some places, our forecasting was not in place. And those were the most inefficient in terms of a P&L. That impacted our P&L dramatically. And there's a big push on how can we improve our forecasting? How can we keep it less than one standard deviation or even less? So that is something we have been focusing on. And yeah, so these I would say are the main things that we would talk about. And the third one I said about micro targeting. So one of the projects that I worked upon was customer segmentation. Banks traditionally, the big banks essentially traditionally would have a block marketing process. So for example, there are 26 participants on this call, right? A bank would target all of them equally. Put $10,000 and we'll give you $400. There is no micro targeting. Now, the benefit of micro targeting is each and every customer can be targeted at a different level. Some of us have low income, some of us higher income. Some of us come from a different background and have different need. So from my perspective, the more accurate we can identify the customer behavior and their needs will play a big role, especially because banking has become commodity, and experiences and micro targeting will help a lot. So those are three things that I believe are changing. And from a day-to-day perspective, day-to-day basis, what my team or people at Capital One have been focusing on.
Really interesting, to be very honest. I mean, while we are buying, we don't think so much technology, and thinking goes into targeting. Sophia, what are your thoughts on it?
Well, first, let me say, I wish I could see the trends that Sohrab mentioned, because that would actually be a transformation. The issue being inside the bank is that you see this happening not in 5 years or 10, maybe 15 if we are lucky, and that's just being lucky. So I think I align more a bit with what Karan is saying on his institution. At the beginning of 2020, we saw a huge increase in RPA, robotic process automation, more of necessity than anything else. So in Canada, with the government benefits to counteract the economic impact of COVID, we had a bunch of requests for clients' accounts deposits to be directly from the government, and the only way to go was RPA. So that one kind of caught us off guard. And now we are seeing the stabilization of RPA as a way to operate for the future. On another hand, I would say cloud is more what we're seeing. So you see it like nothing new. Like we've been talking about cloud for ages in every single industry, but now in banks, we're finally implementing it full case for all the scenarios possible. The good thing about cloud is, like I said, it didn't cut us off guard. We were already thinking about it. Now, in the case of CIBC specifically, you may have heard a few months ago, we made public our commitment to Microsoft for our cloud platform. It's not that we just started, it's just that we are now committing to fully utilize it. So for instance, in my team, what we're thinking of is like how we're going to leverage the APIs that rely on Azure, especially those that use ML, pretty much aligned with the use cases that Karan was mentioning. So I do see a lot of common aspects with what both Karan and Sohrab said, but the pace of innovation, again, is going to be very, very slow. I think the big advantage that Canadian banks have is that both our risk appetite and the Canadian regulatory environment are very conservative. So we are seeing technologies opening new opportunities, but the pace of innovation is, let's call it safe and steady. So it doesn't mean that there's no opportunity for fintechs, rather they have to work with us in partnership. When it comes to innovations, the banks need the fintechs to be testing these small scenarios, but the fintechs need to consult with the banks to understand what is the regulatory space, what is available, how can they operate within this space that is yet undefined. And the only way to define it is by the consultations that the banks and the regulatory environment have. So that pretty much slows down the opportunity for all of these things. Having work in the quantum computing space, so this fintech that I work with, they operate both in Europe and in Canada. And right now they have published use cases in Europe, in different banks, in different insurance companies, and nothing yet in Canada, because just starting to understand what can you do within the regulatory space, it's impossible for the fintechs to do that alone. But yeah, I mean, on the sense of the banks, I think there is a change. The change is more subtle than you would think. It's more about how we're simplifying the delivery of the services that we have always been provided. In essence, it's the same. We have credit cards, loan, mortgages, whatever, but we're being more efficient about it. We're reducing the cost. We're making sure we protect our clients' data and assets throughout the entire process. So that's the kind of transformation I'm seeing with technology. Eventually, we will have the foundations to be ready for all of the amazing use cases that Sohrab mentioned.
One thing that I would like to add what Sofia mentioned about AWS is actually Capital One is among the first few banks and as a company where we are 100% into cloud, and we are with Amazon Cloud essentially. It's a public news. Now, she mentioned a little bit about the pace of the change of pace could be slow. Now, there are two perspectives to that. One, when Capital One was founded around late in 1990s, but the bank started in late 2000s. Now, at that time, we had the technology and our execs made the conscious decision that we want to be a technology-led company. Now, from that point to now you can say that the rate of pace is slow or fast, but from a banking perspective, that's fast. But then when we talk about traditional banks, because they have such big, vast infrastructure already built up, the rate of pace for change for them is going to be much more challenging, right? New technology. So that's what I would like to, from my perspective, what Sofia was saying is there are two angles. One, depending on when the company was founded, what are they trying to change? The rate of pace could be fast or slow, but big traditional banks, the JP Morgans, the Goldman Sachs, they're doing an amazing job with technology transformation. But how much they can achieve in the short time is something that is debatable.
Yeah, I think when you look at the pace of the ecosystem, I completely agree with what you're saying, Sophia, about the environment and the kind of pace that we see here. I think it's also a factor of ecosystem dynamics. Like, of course, there are different kinds of companies in the ecosystem, right? And each has their own sets of incentives and challenges that they work with. But then as all of them come together, sometimes there are forces that emerge that force that innovation as well. And I'll go back to the example of like how Apple Pay or Google Pay have redefined, or in India, Paytm has redefined digital wallet adoption pace, right, in the shorter term. And you go back 5 years, yeah, wallets were good, but nobody really was like getting into it. And then in came Paytm in the last 5 years with demonetization in India and all those sort of things. And Apple Pay's entry into North American market. And now you see wallets are like pretty much everywhere, right? So with the new technologies itself and quantum and that kind of thing might be still a little bit of a thing that's just coming out of lab. But you start looking at decentralization, it's already happening. Like you look at Square's making moves where it's not just a terminal for accepting payments anymore. It's essentially your entire financial function for a small business, right? Like you can do inventory, you can do payroll, you can do invoicing, you can basically as a small business do everything that you want to do for your finance business on a Square terminal. So those kind of things you would see, or embedded finance, right? Tesla is offering insurance now. So all those sort of things you see are emerging quickly. And if there is a weight of a heavy or a strong player that enforces that trend, then it picks up more pace in the shorter term as well. So those kind of dynamics can alter the pace of the adoption as well of these new technologies.
Really interesting perspectives coming out of there. And I mean, everybody talked about regulation. So let me ask that very pertinent question on regulation. So what are the challenges and potential threats in governance of these technologies that you see? What are major global banks or fintechs doing in order to mitigate these challenges and risks? So maybe this time I'll go with Sofia first.
Sure. So I talk a little bit about the regulatory space and how the banks coordinate with the regulators, but let's start from the big threats. So as financial institutions, we have departments dedicated to monitoring the outside threats for cybercrime, finding out what the latest trend in third-party fraud is, client impersonation, and so on. So for instance, during COVID, we saw that there is an increase in scams, transactions, transaction calls to our clients, and we need to figure out models to identify what would be an atypical transaction for our client, because otherwise there's no way to identify this. So the great thing about these scenarios is that we have built these departments in the banks that they work in collaboration with other FIs. When it comes to protecting the industry, we are not competitors. And that is how we have created this governance structure that allows us to build the protection mechanism for the entire banking system in Canada. And now, from the different perspective, we also need to worry about the internal threats. And as an example, how we might pose a risk to clients' data by simple misuse within our employees. So being heavily regulated, we have policies, we have internal controls, we have chains and chains of identifications of role, responsibility, supervisors, operations, controls, like everything you can think of in the big bank. And now working from home, there is a special emphasis of how do we make sure that our controls are still working in this new environment. So when it comes to companies, smaller companies such as a fintech, my biggest concern would be the level of maturity of their internal governance and internal controls when the regulation is never going to be specific enough about what is it that you need to implement. They give you the guidelines, and if you break them, that's when you hear from them. So if you're a small company, and let's talk about just this, like connectivity, if you're using indistinctively Zoom, Microsoft Teams, Google Meet, or whatnot, what can you do if there's a breach? How do you monitor that there isn't a random person joining the call and getting information? Even worse, if you use a free version, because maybe you don't see the need for the paid version, what protection are you guaranteed? The advantage of working in a bank is that we are we have a very high risk aversion. So we have tons of controls for every possible decision, even coming down to which system are we going to use for video conferencing. At CIBC, we partner with Microsoft for our video conferencing needs. So that means that not only we have to monitor our networks, and it goes back to what I was talking at the beginning, these centers that have been built around the big banks to communicate about the external threats, they're also monitoring Microsoft, because a threat to them could be a threat to our internal communication system. So the advantage of these large institutions is that we have a bigger network to be on the lookout for every possible threat. Now, can you imagine like a fintech dedicating one employee just to monitor attacks on Zoom? It's like that's a huge cost for them. It's not so much for us.
That are some really, I guess, stringent steps that are being taken by banks, because so much of data is being kept with them, and any data breach can lead to a lot of problems, I understand. So Sohrab, what are your thoughts on Interact, given that so much of payment and data is being transferred? How is it's ensured that the privacy and the governance is maintained?
Yeah, I think from a more macro view, if you look at these technologies coming together, and I speak from Interact's perspective in the sense that we've always been in the middle of the ecosystem. So we've had to take that view of all the stakeholders and how anything new impacts them. And when you look at it from that perspective, and even the consumers, I think there are three themes that come to mind in terms of the governance of these new technologies. And when I say new technologies, I'm looking like 3 to 5 to 10 years out again. Those are making them equitable, making them accessible, and making them accountable, right? So when you look at equitable, it's about an inclusive pace and design of services. Sometimes technology can get ahead of itself and change the processes or society in a way where not everybody can keep pace with it, right? And that's been the challenge in the last 10 years. Like you look at technology's explosive growth, there's been emergence of this interconnected web of services and products that are out there, which have been created by like a few people for predominantly the majority of population of the world, right? And that works as long as these products and services are like auxiliary to how normal things work. Like mobile phone 10 years ago, you had a codeless phone, but you also had a mobile phone. So it was auxiliary. Today, mobile phone is the way. So if you're not comfortable with that technology, you're basically marginalized, right? So making, and then you can think of it in terms of like something very practical, like two-factor authentication. For people on this call, two-factor authentication, which is in most of the fintech products that you use today, it's pretty ubiquitous, right? You're pretty familiar with it. You don't feel like any discomfort in that. But I've seen my mother, who's 62, fumble trying to access her bank account because now there are codes going to her phone. Her phone is not working, so they're sending it to her email. She barely checks her email, and suddenly she's locked out of her bank account, right? So just making sure that all the products and the services that we're creating are sort of inclusive in that aspect of the different segments of population, and the pace of evolution of technology is kind of keeping pace with how the society is adapting it as well. The second bit is around accessibility. And when I talk of accessibility, it's both accessibility to technology for ecosystem participants and accessibility for consumers. So when you think of accessibility for ecosystem participants, as these new technologies emerge that influence the fintech services or products that are created, let's think of where these technologies are emerging from. More often than not, these technologies are born or the companies that have access to these technologies today are the ones that are already big players in technology or predominant players in technology, right? So how are we allowing access to new entrants to access these technologies and build products and services on top of this, and how the entry requirements for them are sort of right-sized. And Sofia talked about compliance for a startup. Like, let's say you're entering a new open banking environment, or you're entering a new digital banking environment. The amount of compliance that you have to go through as a fintech, not many can go through that, right? So how do you right-size the entry requirements? How do you make the technology accessible for the ecosystem? And then on the consumer side, we talk about access to these fintech services, but we also need to talk about access to recourse, right? Historically, a consumer, when it interacted with a fintech or any other technology product, the transactions were offline, and there was some sort of an implicit trust built in that interaction or transaction. But as you've moved it online, there is a power imbalance that comes between the service provider and the consumer, right? And that stems from two reasons. That stems from like a lack of like some sort of a designated point where you can go and get your issues resolved. Like and the second is like just the dynamic of it. If it was an offline transaction and something bad happened, there was reputation at stake for that particular service provider. But now, with that service provider being so large and so concentrated, it's just hard for a small consumer to kind of get recourse from that large company, right? So to restore that balance of power, you kind of need to look at what are the trust mechanisms you're building, what kind of recourse or access to recourse the consumer has, and we need to think about that, because without that, you will see, like on LinkedIn or other places, consumers posting this, I have been defrauded, or I've been done this, I don't know what to do, I've been following up with the company for so long. So all those sort of issues will emerge if you don't have these access or trust mechanisms in place. And then lastly, accountability. The last decade of technology evolution has been just largely free of any mechanisms that create consumer protection. So it has allowed broad innovation. It has allowed a lot of companies to emerge, but we see unintended consequences in the form of like misuse, fraud, or loss of balance of power that I said. And the two main reasons for that are technology is treated as separate from the society. It's like an add-on. But these products are so embedded in our lives today that they're not really separate. And I'll give you an analogy of it. If you go to a shopping mall and you go to 10 different shops, if each shop made you sign a 10-page agreement and then put a bracelet on you and said, everywhere you go, I'll track your movement, how will you or the governance structure react to it? There would be upheaval, right? It's the same thing that's happening in the digital world. You go to 10 different websites, you're signing a accept all agreement on your privacy and security, and you're wearing that cookie bracelet that tracks you wherever you go. But there's no upheaval on that. Just because of consumer psychology, the consumer doesn't see it. So it's treated as separate from your life. It's not treated as embedded in your life, whereas something physical would be treated as more integral to your life. So that's the thing we need to look at. And as we move towards the new technologies, and there's automation kicking in, there's decentralization kicking in, these things will be more and more important, these accountability mechanisms.
That's a great insight, Sohrab, regarding the balance of power. I totally agree. And when you were talking about this, I felt that we all are changed through technology, and consumers definitely are. So, Karan, what is your perspective, especially given that the balance of power is now not in favor of consumers? How do you see it?
I mean, so both Sophia and Sohrab raised really good points. So if we distill it down even further, there are two main challenges. One, I want to talk about inclusiveness that Sohrab touched upon. And the second thing is, it's when we talk about compliance and everything, the biggest challenge that banks face is resources. And I'll touch that as well. So first, let me talk about the inclusiveness he talked about. And there is a term called disparate impact. So just as people who are not aware of it, you can have policies in place. You can use new technologies. And you would say, let's use that technology with the equally for all set of population. But that creates an discrimination in an indirect way. So for example, if you use a technology, as simple as a mobile app, we know people who are more than 60 years of age in the United States are not that tech savvy, or customers who are less than 18 years of age do not have a lot of digital information. Now, using the same technology for the entire population base is going to create a disparate impact. Now, that is something we have to think about when we are talking about these new technologies. How are we implementing in a way that does not create an impact? And so that it's more relevant for people is an example of what happened with Goldman Sachs, Apple Card essentially. Goldman Sachs underwrote the policy, and we saw how that discriminated against women and men, having exactly equal profile, right? So that's what I mean by disparate impact, is where same policies create different impact. The second one is resource constraint. Now, we need to understand banks are competing with technology firms, right? It's a digitally enabled world where technology, computer science background, technology, engineering is in demand. Now, how do we compete in an environment where the salaries or the incomes that are provided by technology firm is way more as compared to what bank can afford. Banking or fintech is actually a razor thin margin business. Technology is different. And this is something we face on a daily basis. So it's one way to say, oh, we can have governance, we can have policies to prevent, we can have compliances, but who's going to implement those? And this goes back to implementing the new technologies. We can talk about automation, having AI tools, but then again, we come to the same question. Do we have enough people to hire in the broad pool of set, right? These technologies are emerging. We do not have enough resources. And we know Google's and Amazon's are the first one to tap into those really lucrative job markets. So from my perspective, two biggest challenges in governance, I would say, is one, availability of resources and competing with the technology firm. And second, using these technologies in a way that does not create disparate impact, or alternatively said, is what Sohrab mentioned, is ensuring these technology is inclusive. And those, I would say, would be my two perspectives on challenges.
Yes, I do agree to that, Karan. I mean, some really valid points there. So we understand that all these technologies somewhere, I mean, need internet. And, internet has been a major force behind bringing about this change. So my last question would therefore be, how can better governance of these technologies, financial technologies, can lead to a more safe and secure internet? And I would like to begin with you, Karan, on this.
I mean, the first and the biggest thing is and I will start with an example. In 2017, there was a data breach at Capital One. Now, there are multiple impacts, right? So one, the banks or the fintechs lose trust. Banking is a business of trust. You can talk about everything. If there's no trust, we cannot acquire customers. So that's one. And second is the benefit, or let me take a pause here. So if I understand your question here, how can better governance of financial technology lead to a more safe and secure internet, right? So one is, I talked about data breach. The second one, I'll go back to the point that I was raising around inclusiveness, right? Now, if you don't feel included in the banking sector, if you don't feel that this bank is in my interest, then I'm not going to go and bank with them. If I don't go bank with them, I do not have the opportunity to utilize whatever new technology is coming around. And as example, around last year, so my team interviewed around 180 customers across United States. And predominantly, everyone said banks are out there to take away my money. They are making billions of dollars, but they can't give me interest rates, right? Now, what that creates is a barrier between them and the banks. So while they would bank with us, we cannot create that sticky loyalty between the bank and the customer. So I can start implementing new technologies, everything that we spoke on this forum. But then if that trust is not there, they're not going to adopt new technology. They're not going to adopt those new feature and functionality. So that wouldn't lead to a safe environment. So to answer your question in terms of what are the benefits or how can we create a safe internet, is one, by having these governance in place, we can prevent data breaches, which builds trust. Second, another thing is it builds trust in terms of consumers' mind that the banks or the fintechs are doing things in my favor. So fundamentally, I'm talking about is these governances is building trust. And that is what is going to create safe environment, because then customers would be open to try new technologies which are in their favor.
True, completely. So, Rab, what are your thoughts on that?
I think Karan stole one of my points there, but it's around the same themes we've discussed, right? Like, you have to look at how consumers interact with these products and services, how these different participants interact with these products and services, and then think of like, how do we make it, how do we embed different pieces through the life cycle of that product creation, launch, commercialization, and management later on, that it creates a safe pathway for the consumer or the participants to interact with that, right? And when you think of it from that perspective, you start from like, okay, what can we do in design? diversity of people who are designing these products and services, having that diverse workforce or talent people who are designing these products and services, looking at design from various demographic perspectives, that forces the creation of services and models that are well understood. The learning curve is reduced because now everybody's perspective is brought in, and that understanding of new products and services kind of reduces the chances of fraud and marginalization. So it gives that first step of interaction more safe with the product. And then to Karan's point, the trust framework and that ability to give access to recourse, both of them combined, it creates some sort of an implicit trust in any exchange of value that happens over the internet, and that gives customers the psychological safety to keep interacting with the product. It's not like, oh my God, everybody's doing crypto and crypto is like something new and scam and you should invest in crypto and all of that. And to be very honest, like someone like me who works in innovation, my entire background is in technology. I lost 15 Ethereum in the Quadriga thing that happened in Canada. So I had 50, I lost about, I don't know, today they might be worth $20,000-$30,000, right? So if someone like me can not ascertain the validity or the trust of someone who is providing me a service, think of someone who is not at all embedded in the technology business, right? So that trust mechanism and access to recourse is something really important. Then accessibility we talked about, and I think accessibility just creates a fair ecosystem, and it creates choice in competition so that everybody has an incentive to behave well, right? And then lastly, accountability. So that just provides guardrails for how this new technology and the services models built on top of it kind of penetrate the society and evolve so that unintended consequences are sort of mitigated. I was watching this documentary last night. I don't know if you guys have seen it on Netflix, The Great Hack. It's basically into the Cambridge Analytica and all that thing that happened. But you look at the sophistication of how a rapidly evolving technology where the ends are not plugged can lead to some sort of unintended consequences. That's something we need to be careful of by building these accountability mechanisms and ensuring that these technologies don't become like a loose cannon over the next 10 years.
Yes, thanks, Sohrab, for those really pertinent points. Sophia, you have the last word.
Okay, so many good points, both by Karan and Sohrab. I'm going to try to bring back everything together in the context of the largest players of the financial industry, which is basically the big banks here in Canada. So at the end of the day, it comes to how you balance your company's risk appetite with your clients' demands. At large banks, we tend to have a really low tolerance for risk, but it cannot come at the expense of servicing your clients' needs. So what we focus on is delivering what our clients need, but building this trust in their financial institution. And more than how we implement good governance of the financial technology, it comes to how we demonstrate this to our clients in every single interaction. When you want to execute a transaction, let's say you want to change your investment and the regulators demand us that we get your signature. So we have to use secure methods to send and receive the documents, but more than that, we have to let you know the financial advisor tells you you are going to get this secure email, this is how it works, this is why your information is safe. So our frontline employees play a big role in building this trust in our bank. In that sense, it's never just about the technology, it's more about the message we give of a safe and secure banking industry. Now, the problem comes when the demands are not being met because of our risk tolerance. So think about the crypto environment, following with Sohrab's example. The general stance of the banks is that companies that function on the crypto market by specializing in the issuance, distribution, or trading cryptos are too risky for our risk profiles. And the main risk is that all financial institutions need to meet AML and KYC requirements. We need to know the presence of funds, ensure they are not being used illicitly. And basically, the banks say, well, if you cannot know where these funds are coming from, how can we know? Then we cannot meet the requirements. So yeah, it's too risky. But more than that, think about these are companies. They need to get access to credit. They need to get access to loans. And the banks are not willing to take the risk of them as clients, not even as partners in the industry, right? So this caught my attention recently because in October, there were only 3 companies in Canada that had met the requirements for FinTrack KYC. Simple, Netcoins, and Coinberry. So pretty big, well-known fintechs in the space. Now, just this week, there was another news that another crypto, BitBuy, it got approval from the ODC. So now we are getting companies that are getting recognition by the regulators. Now, these fintechs now believe that because they have met the regulatory requirements, it would be easier to get access to the banking system as clients. I'm not even talking as partners. That's a whole other layer of complexity. We have to wait and see. Let's see if the banks are going to finally start opening their doors to these companies. But just to put everything into perspective, I think the way to go is that we need the government to be aligned on that, the fact that there is a need for these companies to exist. There is a need in the financial industry to have this innovation. And without the government being aligned, the banks will never take the risk. And without the banks taking the risk, these companies face so many barriers. So how do we make it more safe, secure? We need to connect the entire industry together. And we need to allow these fintechs to sit at the table with the government and with the banks and discussing what are the implications of them being unable to access the system.
That was a great note to end on, that we really need to be aligned with government to make banking and internet ports really secure. So we will now move on to the Q&A round. And to do that, I would like to invite Prateek Pathak, founding president and advisor to ISOC India Mumbai chapter, to moderate the Q&A. Prateek is part government consultant, part lawyer, part engineer, part himself. Prateek works in the business excellence team at Lakme Unilever. And when he's not busy digitally transforming the face of beauty sector, he volunteers with the chapter. So over to you, Prateek.
Thank you, Nandita, for this generous introduction. We'll start the Q&A, but I just have one question to all of you, before we take a lot of other questions which are here on the list. So, before working for Unilevers, I used to organize a music festival called Sunburn. I was one of the organizers for Sunburn Music Festival. And last year, pandemic hit us. And at that point of time, we wanted to search new ways of supporting, our business and raising funds. And at that point of time, not only an entire music festival went online and virtual, but we also did something of, releasing some NFTs of our Sunburn logo into the market. And, this, we were able to raise our funds, and, this kind of got me thinking. And this forms a pretext of, my question to you. Nowadays, you hear a lot of things about, metaverse. If you are from Facebook, or, you have heard of Omniverse, if you are from NVIDIA, if you are from Internet Society, I would say that now Internet is no longer two-dimensional. There is a possibility that, it will go three-dimensional in future. So how do you visualize, your roles and your companies, in a three-dimensional internet? Now, I just want to know from each of this. I'll start first with my engineering classmate, Karan. We both went to engineering together, and we'll start with Karan, then we'll go to Sofia, and then Sohrab will go to you. So the question is, how do you visualize your role as a fintech person, in a metaverse, omniverse, three-dimensional internet, what you would like to call it as?
See, first of all, technology is going to change, right? So right now we have physical branches, it's going digital, and it might go the metaverse or the AR, VR world. But fundamentally, banking will, in my opinion, banking doesn't change. If you look at the history of the banking, right? When we talk about banking, essentially, Sohrab had defined, it's a unit of information that goes around, right? In historical times, we had gold coins being exchanged, we had barter system, we had lending. All those fundamentals still remain the same today. Earlier, it would be in person, it would take a different form. Today, it's taking form of, let's say, Bitcoin, it's taking form of digital currency. Tomorrow, I don't know what's going to be in the metaverse. The fundamental mechanism of banking or the unit of money will not change. Now, how does that look in metaverse is something I don't know. It's very hard to visualize how that would change, but it's a technology play that would change. But banking, or how we view the need of money, that shouldn't be changing, in my opinion.
Thanks, Karan. Sofia, any insights on that?
Yeah, I think it goes back to when I introduced myself, when I mentioned what was my passion in fintech, I'm looking to the regulatory space. So if we have all of this information, regardless of what shape or form it ends up being, if it's all transparent, I think that would be the major disruptor for my role and the area where I tend to focus. Right now, I'm internal audit. So the more information we have, great. Now we just have to analyze it and we have to use it. So I think there is a big opportunity. I think it's, again, going to take forever for the banks to understand it, to implement it. But once it's there, it could transform the industry completely. Now we can really provide trust based on actual transparency. So I think it would be great.
Yeah. The one thing we do in our team as we look at foresight is we never try to predict the future, because nobody really can predict the future. What we try to do is create different scenarios. So if these new things are emerging, you're getting these signals like metaverse is a signal, CBDC is a signal, right? You try to see how these could pan out in different scenarios. And then for each scenario, you think through like, what's my role in that, right? And then you create sort of like, okay, what are the most probable scenarios out of this? So you can't really define like, okay, this will be my role or this will be how things will evolve. But what you can do as you look at it from a strategic point of view is, what are the different scenarios that could pan out? And how do I lay the foundations today so that I am relevant and I am a major force in those scenarios, right? And as those scenarios unfold, you slowly take those steps to kind of orient yourself towards what's unfolding. So to your question, what's the role? I think that'll be determined by how these scenarios unfold. And as these do, the role will evolve with it.
Thank you. I think that sets the ball rolling. I'll now just go through the questions which are here in the chat. So I'll take the first question from Jolly, who is ex-ISOC New York president, and who is also making sure that this event is being live streamed across all ISOC handles as of now. So Jolly has a specific question on government and encryption. He wants to know as to how much is fintech being threatened by government moves on weakening encryption. So government is making moves to weaken encryption, and is fintech being impacted by it? So who would like to take this first? Karan, Sofia, Sohrab, or all of you would like to take a 40-second bite on it? So we'll go take a 40-second bite. Sohrab, you want to go first?
I'm not sure what you mean by weakening encryption there.
So I'll give you a bit of context here. So what happens in countries like, say, India, the government has come up with new social media norms. And as per these new social media norms, or, in general, social intermediary norms, I think media is the wrong word, intermediary norms, any social intermediary has to, make certain, social intermediary has to make certain communication visible to the government. So normally this is with regards to, personal sensitive information, but, even, sometimes some financial information might also be, released by government. So for example, if you want to figure out sort of if you're, doing some money laundering, we can look into a WhatsApp chat, weaken it and, get the money out.
So I can take a crack on that very quickly. I think the two extremes here are where nobody can see or share the data, or the other extreme is where somebody is being forced to see or share the data. But really, who is the owner of that data? The owner of that data is you, the customer, right? So if you want to share it with someone, you should be able to share it with someone, right? And that's the whole premise of the open data movement, as you see across the globe. So I think what we need there is, and both of the extremes that you see come with reason, right? What the government might be trying to do is to ensure that this doesn't become a loose cannon, as we talked about, right? And what people don't want to share is because of privacy reasons. So to balance though, what you really need is something like a trust framework riding on, how consumers can give permission to actually share their data with whoever they want to share. That's where the trust mechanisms come in. So that's how I think, like, as you see the evolution, those will start kicking in, where you see this in Australia. Australia has a consumer data right, where your data across 5 different industries of telecom, energy, insurance, and banking is actually now customers' right to own that data, and customer can provide permission to share that data with anyone. So that's the path I see going forward in that aspect.
I want to add something coming from the perspective of the government. I see this also as an opportunity for a particular type of fintechs, those that work on the space of securing data. And now, especially those that can work with the government. So the system that we implemented a few years ago in Mexico, we were looking at biometric data from clients that the government wasn't collecting, the banks were collecting it, but we had access to it, we were able to store it. So if anyone attacks the government databases, that's a big risk. And the banks would be blamed for it because they are the ones collecting the data. And you're talking about an environment that is not as legislated as Canada, US, Europe, Australia. So I can imagine like a similar concern could happen in India. But then what happened is that we started seeing a lot of startups offering their services to enable us with mechanisms to protect data that the government would never be able to come up with. So I think there is an impact more for the on the negative side for the fintech that's on the face to the consumer, but on a very positive side to the one that's on the back end protecting the information.
Thanks, Sofia. That was insightful. I'll move to the next question. I don't know, there are a series of questions coming in. It seems the audience is very excited to talk to you. So this question is from Biren. He wants to ask, when open banking becomes a norm, which type of companies will benefit or lose from it? And, he is asking, for instance, like what will happen to companies like Visa, MasterCard who are already in this space?
So from my understanding, if you look at like UK was one of the first ones to implement open banking, and everybody's gained from it. It's a framework which is not a zero-sum game. It's more of, and I'll give you a tangible example of how different companies can benefit. Of course, fintechs, like the traditional narrative you would see is like fintechs would benefit because they can provide services, because they get customers' data now. But even the incumbents can benefit by exposing their products to a broader audience, A. B, you think about incumbents have the customer relationship, right? And they are the ones that the consumers trust because that's where they park their money, right? And so if they can build on that relationship and trust, and they get customers 360-degree picture of finances and what the customer's whole financial standing is, it allows the incumbents to also provide services in a more cost optimized way, in a more personalized way, allows them to cross-sell and upsell their products to those customers as well. So I don't think anybody would be completely disintermediated or completely disrupted. I think it's a win-win for everyone, depending on how you can figure out a model to use the both incoming and outgoing data to kind of expose your products and also get the data into your products to funnel them to your consumers, building on the trust and relationship you already have with them.
And a quick thing to add here is, as there were a few questions that Nandita asked, and one of them were what were the challenges? And we talked about building trust, right? Now, the open banking allows new players to come in and create services that Sohrab kind of touched upon. And when you have new players which are more trustworthy, that actually creates an environment where we have much more inclusive banking, we have much more access to resources, right? And then, as an example, in United States, we have early payday. So let's say generally people get paid on 30th, last day of the month. But we have these new fintechs coming in which have access to customer data. And now these customers can receive their salaries 2 days before the actual deadline, right? Now, this is the advantage. It's a win-win for everyone. Now, one area where some companies that might be affected is actually, I would say incumbents might be impacted a little bit. And let's say JP Morgan or the other banks, right? They have really massive customer base. Now, what is a challenge for them is it might be difficult for them to segment or keep the customer segmentation essentially something of a proprietary advantage. Let me put it that way. If you can access the entire customer base of your competitor, then it's a fair game for everyone. It increases competition, which is good in a way. But for banks, now they have to think much more in terms of how they want to keep the engagement high, how they want to keep the loyalty up, so that even though other banks or other fintechs have information, that they do not leave the banking system or do not leave the existing relationships.
I'm sorry, I have to cut in, but some of the panelists have to go, Prateek. So
Sure.
maybe one more question.
So one more question, and I would just request the panelists to, give in your email ID or, some LinkedIn profile in the chat. So, if any one of us wants to probably connect with you after this call, and, if they have some questions, they can reach out to you then.
Offline, yeah.
So they they can take it offline. So one last question. This is by Kapil, and, this is now more on the region of virtual currency. So, just want to ask, how do you think national currencies, so for example, India is proposing to come up with their own national currency. So how do you think different countries can come up with their own national currencies? How do you think these national currencies will stack up against, global currencies like, say, Bitcoin and others? Any thoughts on that?
I can take a quick crack at that. It's definitely I mean, I don't think one would, I don't think it's a zero-sum game where it's like if a central bank is introducing a currency, then the other currencies won't exist. And you have to think about how these currencies work today to kind of understand that there is money as the central government shares today. And then there's money that you have in closed loop ecosystems today. So you think of Starbucks, the rewards and all that you have, which are a closed loop economy, that revolves within that. So it's sort of like a token in crypto that revolves in that reward system today, right? And if you look at the central bank, the currency translates to that reward in one way or the other. So when you think of the digital world, you can think of it in the same way, where there are multiple closed loop systems where these currencies are revolving, and then they are exchangeable, right? You can give some money, and then you can get some loaded points or rewards or tokens on your card. So that's how I see it. I don't think it's a zero-sum game, but it'll be more like how those ecosystems and closed loop economies interact with each other.
Thank you. Any quick take by Sofia or Karan, before we move on to the next session? Any thoughts on this?
I think it would basically fall into what is the use case. Going a bit sidetrack to a blockchain as opposed to just talking about cryptos. You talk about centralized, decentralized, internal, external. So it's all about how you're going to use each of these. I agree with Sohrab. It's not competition; they can all coexist. But which is the one that you're going to use will depend on what's your particular need.
Cool. So thank you for this wonderful Q&A session. You have been very patient with us. You have also shared your social media handles with us. So participants, if any of you would like to reach out to them, please feel free to do so offline. With this, I would like to now move to the next session. I would like to invite Gupta, Joint Treasurer, ISOC Mumbai, to come in and give a vote of thanks.
Thanks for that, Prateek. This is an extremely informative session. I would like to begin by thanking our guests for taking the time out on a weekend to talk on this relevant topic. A big thanks to Business Technology Management Association for the support to the event. Thank you, Jolly, for live streaming the event to 110 chapters across 6 continents. I would also like to thank Nandita and Prateek for effectively moderating the session. Thank you, Feroza, for designing the creatives for session, and Mustafa Rajkotwala for reportering the session. Last but not the least, a big thank you to everyone who attended this event and their thought-provoking questions. I would also like to thank ISOC Live Dr. Govind, ex-CEO Nixie, VP APSIC, and ex-ISOC Delhi President. So with this, we have come to the end of our webinar. Request you all to switch on the cameras for a quick click.
So all of those who can, if you can just switch the camera for a second, I will just take a quick click for our report. As you know, the session is being recorded and it will be great. A report will be created. So thank you, everyone. And 1, 2, and 3. Thank you so much, everyone. And I'm sorry for being a bit over time. Thank you everyone for taking time out, and I'll just end the recording now and end the session. We'll get in touch again, and thank you so much and have a great weekend.
Recording stopped.
Thank you.